Hey, good morning, good afternoon, and good evening, everyone. Just wanted to start a little bit early and do a quick sound check, make sure you can hear me okay. And we're just about ready to get started in about 3 minutes or so. So if you don't mind to chat in the chat box and let me know if you can hear me okay and where you're tuning in from, that would be awesome. Let me make sure the sound is working, but it does appear to be. Hey, Mohammed. Can you hear me okay out there in Vancouver? Just started raining, drizzling for the first time in 50 days, Mohammed says, out in Vancouver, BC, and now in Canada. And boy, we need some rain because we do have drought and forest fires. Oh, Dawn says, see you and can hear you. Tom from Burlington says, morning and loud and clear. Sandy, great to have you tuning in from Vancouver. Awesome. Doing a little holiday perhaps. And Robert says, enjoying the rain in Seattle after 51 days without any. Wow. Marguerite from the darkest Oakville, Ontario. Yeah, I hear there might be some storm clouds heading out your way. So hope all is good there. And Mike says 5x5 in Edmonton. We have Gerald from Cleveland. Vicky says hearing you loud and clear from Fort Worth. Graham from Norwich in the UK. It's so wonderful to have an international audience. We just love these events, and I hope you get as much out of it as we put into it. Very delighted again to have David Paul with us. David will come on just a little bit later to do a nice review on the US and UK markets. So looking forward to that. Eric says, if you want rain, it's free here. We have enough. Not sure where you're tuning in from, Eric. I might have missed it, but yeah, we could take some of that rain off of you for sure. Glenn from the Blue Mountains, good to have you with us, Glenn and Eli, Bob. Well, listen, it's 1 minute to start time, and I really appreciate the chat coming in. And I think the YouTube format that we've been using, by the way, this is where the videos will be archived, is on YouTube going forward. So, but I love the chat so you can actually kind of communicate with each other. And I know many of our experienced VectorVest subscribers answer a lot of questions that are in the chat even before I get a chance. And it's greatly appreciated because we have so many knowledgeable subscribers, US, Canada, and all of our countries. So keep that going. Bob, wonderful to have you with us, and says nice to get another international forum discussion. We did take a break in July, so that's our usual holiday, and that was nice to have a break. Rob from Oat Lake, great to have you, and Jacques from Belgium, rain, rain, rain. So I think maybe over in Europe we're getting a bit more rain than we're getting here. Oh, Harry says coming through loud and clear in Duncanville, Texas. If you're not familiar with Duncanville, Dallas is one of our suburbs. There you go. Margaret, great to have you with us as well from Grand Prairie. Previous, I guess, was the March International Online Forum presenter, so well received with the Finger 4 update. Wonderful. Well, listen, I think we're ready to start, so I'll formally welcome everyone. Again, this is Stan Heller, broadcasting from my home office in Lethbridge, Alberta, and fingers crossed on the sound and quality of the presentation. But so far, we're off to a good start. I seem to have pushed all the right buttons. We're streaming, recording, and all that good stuff. So, so I think we're all good. So let's move on here. Just a quick risk disclaimer. I think all of you know there is risk in investing, and just to confirm that everything you will see and hear today is provided for educational purposes only, should never be considered as investment advice. The information is designed to empower you to make your own investment decisions using the VectorVest tools, and these decisions are yours and yours alone to make. So just really always like to stress that and make that clear right off the bat. All right, so our agenda for today, we're going to have our color guard review, looking at VectorVest markets around the world, and then we'll have Dr. David Paul come in and talk about the US and the UK in particular. And then I hope you'll stick around because I've got a presentation that I think will be valuable and helpful to you, especially for those of you that might be just struggling a little bit. Even though the market overall has been really in a strong uptrend, certainly since November, and even before that, after the COVID collapse in March, we've been in a strong uptrend. And, the indices are performing extremely well. And so if you're not performing as well as the indices or better, I hope you'll find this presentation of interest to you. I think it's fairly simple. I know we give you a lot of different techniques and strategies in these international forums. This is one that you can apply to other strategies that you might have learned from other presenters along the way. And that's one of the things I always worry about is one of the biggest challenges I think a lot of people have is sort of jumping around from, strategy to strategy to strategy, always looking for the holy grail. And VectorVest kind of makes it easy for us if we just follow some simple steps. And I've just got them here with 4 simple steps. And so I hope you'll be able to stick around for that. And just so you know, the recording, we're archiving these recordings on YouTube, and it'll be available almost immediately after the presentation. We'll go about 90 minutes, which is typical for our forum presentations. And then immediately after, it's available on YouTube using that same link that you have used to get into the presentation. Oh, this is great. We've got Marvin from Mars. Oh, that's great. And Ursula says, Margaret, thank you for your presentation. I loved it. And that echoes a lot of comments that we received about Margaret's presentation. All right, so just before we get truly started, I want to let you know both Jerry D'Ambrosio and myself, we're kind of tag teaming on 4 how to master moving average presentations next week. And you can see them in the views. They're certainly in the views in Canada and the US, and I believe everywhere in all our countries. And this is an overview of sort of the keys to using moving averages, how you can use them, and then focusing in on the EMA strategy, the 3 EMA strategy, EMA squeeze that has been so popular and helpful to so many people. So we just want to hit on some nuances and show you some new stocks using that strategy, and talk about the launch of another session of our Mastering Moving Average course that's coming up. And so you'll learn about that if you decide to tune in. Just go to the views and click on the register button. Look forward to seeing you. So let's get right into it. And looking at the color guards, it's been an extremely bullish time since our June 4th meeting. I think when I looked here, every one of these year-to-date numbers has grown since our meeting in June 4th. If you're not hearing sound, I might ask you to kind of log off the YouTube and log back in, but I can see from the chat that everybody's able to hear me okay. I will move the microphone just a little bit closer, and I'll try to speak a little bit louder. All right. So looking at the top left, Canada very quietly and sneakily has become one of the top performing countries in our VectorVest platform. And you can see year to date, we're up 15.15% up there in the top left corner. Now it's really interesting on my slide, my laser pointer is showing up beautifully. Oh, there it is a little bit now on the YouTube. So there it is. So 15.15%. We're currently mildly bullish. You can see we've got a lot of green in the price column now. What's holding us back and what's holding the US back a little bit is this buy sell ratio 0.44. So we still have, as you know, not as many stocks participating in the rally as we would really like. The health and breadth of the rally isn't as strong as we would like it. And you can see we came all the way from about 0.20 just 3 weeks ago, and we have improved on the buy sell ratio, but we're not above 1 yet. But in Canada, that did not preclude us from having this confirmed up call, which has been in place since November 11th. So we've had a truly long rally. We use different criteria than the US for our confirmed calls. We use the 65-day moving average and the MTI being above 1, whereas in the US, the buy-sell ratio needs to get above 1 to get a confirmed up call. So you can see now when I move over into the middle, the US at 0.71 for the buy-sell ratio, we're still quite a ways away from getting a confirmed up call, even though the overall market has improved, starting to see some green, and the MTI, just like Canada, sitting at around just over 1. So that's all good. Gosh, some people say the volume is great, and Doug says it's appalling in South Africa. I'm not sure what I can do about that, Doug. Let me see if I can't even turn it up. I mean, that's as loud as I can get. I'm speaking right into the mic. I'll keep doing my best, but everybody else is hearing me okay. All right, so log off and log back in. That's all I can say. Just looking at Australia, up 10.7%, and the buy-sell ratio moving up pretty strongly now, and the color guard is somewhat bullish. However, in the strategy section, the warning here is, however, with COVID-19 uncertainty and volatility still surrounding the market, it's best to continue with caution and keep your eye on the color guard in the upcoming week. And that's similar to guidance for UK and Europe as well. There's a caution light on from that point of view. And the UK, David will go into it in much more detail, but up about 10.88%. Year to date, the buy-sell ratio has really climbed all the way up to 1.67. So that's a very healthy market in the UK, and it really shows with all the green in the color guard as well. Okay. And then on the Europe market, they've actually got the best gain year to date at 19.42%. They're mildly bullish right now. They don't have a green light in the price column, but they do have a green light in the buy-sell ratio, 2.14 buy-sell ratio. So you can see the range in the buy-sell ratio from 0.44 in Canada to 2.14 in Europe. So similar markets in terms of number of stocks, but the buy-sell ratio in Europe much stronger, much more robust market. So, you know, play the market to the upside when you see that color guard needle into the green area here. But just be aware of the risk with a long bull market that we've had, and the variant, the Delta variant on the COVID-19 kind of rearing its ugly head a little bit, particularly in the US. So use a little bit of caution with new positions would be the guidance there. And people are getting good help with the volume, and everybody else, most people are saying the volume is great. So I have to go with that. On the Canadian side, whoops, I always encourage everyone in Canada to read the strategy section. As the price of the VVC continues to climb to new highs, it's important to note that our indicators are not. And both the RT and buy-sell ratio rest stubbornly below 1 and quite a bit below 1. So let's cautiously play the market to the upside and stay mindful of the color guard. And you can see the channel that we're in, and we've come off of the bottom of the channel again. We've done that now once, twice, 3 times, 4 times, 5 times, and we're heading up toward the top of the channel. And we'll see if that's going to be resistance again and drive us back to the 65-day moving average, which is right here, right along this parallel line. And I've just noted for stock ideas, here's top 10-day price gainers, stocks over $50, and Lightspeed is one to really keep an eye on here, up 16%, had blowout earnings, as did Go Easy. I own Go Easy, just to let you know, and it had blowout earnings Thursday evening as well. So just some stocks to watch in there. I always like to look at the emotional market cycle. Here's where we were back in June 4th. Our last meeting, the buy-sell ratio in Canada was 0.86 and the MTI was 1.1. So the MTI has actually gone down just ever so slightly to 1.06. Obviously, it's been fluctuating in there during this basically a 2-month period. But the buy-sell ratio, 0.44. And so we're just in this optimism phase of the market, both Canada and the US. If I plug those in, you can see we're at 1.09 on the MTI on the US side. So, and we've kind of come down off of the highs up here in both countries, but we're in this trending phase of the market right now, and we could see that on the chart that I just showed. Okay. All right. We like to take a look at the global ETFs year to date, and it really is these US ETFs that are kind of carrying the market a little bit here, or at least these global ETFs, and the triple leveraged UPRO and NASDAQ, you can see, are up 62 and 50%. And then we have, as kind of a dividend yield fund, up 23% on the US side. And there's some other countries, and Canada's right in the mix, up 21% with this ETF. The TSX itself up about 25% just on its own. And just since the last meeting, these are the leaders here. So Israel, Taiwan holding their own here, but it's really these triple leveraged and the Qs and the SPY that are performing well again. And then I do like to track the SPDR ETFs, a little different look at the sectors here. And so you can put these ETFs into a watch list and track them as well. But since our last meeting, technology and the semiconductors, the healthcare and software services have done well. And then it just kind of goes down from there. And oil and gas, after such a long, steady run-up, is kind of struggling a little bit now. You can see the production exploration down 14% just in the last 2 months, and oil and gas equipment and services down 24%. Here's what a chart of XLK looks like with a 40-day moving average. This was the date of our last meeting, and price had just gotten above the 40-day. Really good sign when price is hugging the 40-day and then breaks out, and that certainly did there. And there's the 40-day moving average of RT moving up as well. I'm going to talk quite a bit about this 40-day moving average in my presentation and the buy ratings in VectorVest. So hopefully you'll be able to stick around for that. All right, not seeing any questions about that so far. So I did want to point out my essay in the views on Friday was about the newest top 20 VST stocks. So it's just a simple search to find stocks that have moved into the top 20 VST rankings. And sometimes those are great leads or trading opportunities. And you can click here in the views, just go to Canada and go to the essay in the views and then click here and you can watch a short training video on YouTube or just go to VectorVest YouTube and I'm sure you'll find it. And I'll show you how to set up that search. And these are some of the results that I was getting. TFI International, once it got into the top 20 VST stocks, really took off, went up about 47%, and OBE up about 77%. You know, there's just some really good performers in here. Go Easy, once it cracked the top 20, went up about 75%. So those are terrific results. And I certainly wanted to point out that I would not have done as well in real life trading. I did kind of pick the optimal sell periods to show you some good results. Okay. All right. And I did a back test and I got great results over the last year, as you would expect, using a 50% gain and 15% loss. And beyond that, the performance was really paltry if I went 2 and 3 years out. So I think it is a cherry picking kind of a strategy where you use the search to get in to find the stock that has cracked the top 20 list. And then you use your graph and a trailing stop to get out. And I think you can have some pretty terrific results. And then I did test it on the US side as well, just using quick tests. And obviously Moderna is the one that stands out here. Once it got into the top 20 VST list, it's up 137% from there. But Avid up 117%. So, but I did find there were more weakness or weaker performance on the US side. Just to be upfront about that. So there's just another idea. And my goal there was to show people how to use the Unisearch tool. Just another way to use it. And Robert is asking, what side of the greed fear chart is the US in? Well, it's come down off of its high MTI levels, Robert. So we're in the optimism phase right now, but we're not far away from fear. Okay. He says, I'm in the US and I am greedy and fearful. That's a bad combination, Robert. Oh gosh, that's fantastic. Now, listen, before I turn it over to Dr. Paul, I had an interesting question from Hubert this morning that I wanted to share with you. It was a question for the International VectorVest Summit. I have a portfolio with one excellent stock. Since last year, prices increased so that this stock is now already 36% of my total portfolio value. And I thought this was a great question because I rather expect that some of you or many of you are probably in a similar situation because some stocks have just exploded from that market bottom. And if you've been holding it and it may have kind of overtaken your portfolio. And so the question from Hubert is, should I let my profits run or should I rebalance my portfolio? For example, sell 1/2 of my profit and reinvest in other stocks. So I'm just want to do a quick poll and type in the number for what you would do. Type in a 5 if you're of a mind to continue letting your profits run with that stock. 6, type in a 6 if you would set a tight trailing stop at this point. Type in a 7 if you would sell half of the position. And type in an 8 if you would sell half and trail a tight stop to let your profits run. So I'd like to see 5s, 6s, 7s, and 8s, and then everybody can kind of see what's going on. I'm seeing a lot of 7s and 8s. There's a couple of 5s. They're going by so fast I won't be able to call anybody out, which maybe is okay. Well, there's Audrey. She says 8, so sell half and trail a tight stop. And if you've got a rationale, a reason why you would do that, sell half now, let me know. Let me know what your reason would be. Yeah, Eric says tight stop on 1/2. Keep it going. Yeah, PB Sullivan, Brian says bought MSFT in 1998. And he says it's now worth 7 figures. So buying those good quality stocks and hanging in there with them is a great way to go. Yeah, so Tony says the market is toppy. And Willie says time for caution. Well, Hubert, if you're watching, I hope this has been great guidance for you. Terry says, set a trailing stop and let it go. Maybe some of the other stocks will catch up, So there's no wrong answer, especially when you're up, as significantly as you might be with a 36% profit in your portfolio value. That's a big thing. Yeah, and Scott says, my performance improved once I learned to sell in increments versus all or nothing. That's a great point. And Neil says he's a 7, sell half the position. There are many good stocks to reinvest in. So no wrong answer. What I said was I would not want to risk a major pullback in one single stock that could destroy my portfolio for the year. If you've got a big position, and especially if it comes up toward earnings and there's an earnings negative surprise, it could really substantially destroy your portfolio. And, instead of being a happy camper with maybe a 15 or 20 or 30% gain on the stock, you're going to be a sad camper. Tim says, 5, let profits run until your stop is hit. Again, there's no wrong answer. Lauren says this was a great question. So we want to thank Hubert for sharing that with us. So, gosh, I love the fact you can all chat and see what everybody's thoughts are about this. I'm sorry, there's just so many I can't go through. John says, I have 1,500% profit in Amazon. And in Canada, you may not be aware, but those of you that are Canadian, you should be aware that the CIBC is now offering Amazon as a CDR. AMZN is the symbol, and it's trading at $21, and they are going to be, and it's in Canadian currency, and they're going to be tracking Amazon performance as closely as possible. I've purchased it already at $21. That's kind of where it's at again right now. But it's a way to play Amazon if you don't have, US currency, or you don't want to buy just, a handful of shares. Yeah, David says, here's an option. Just sell half and send it to me. All right, listen, I want to move on. Thank you so much, everyone. And thank you, Hubert, for proposing that question for everyone. I think that's fantastic. So I want to turn this over to Dr. David Paul. We're so grateful that he's willing to give us his time on these Saturdays. It's not only his time, but his expertise and experience. We really appreciate it. So, David, I'm going to share the screen with you, and you will be in charge. I think you'll have to accept that.
Well, good afternoon, Stan. How are you doing?
Very good, thank you. Welcome, David. And I think everybody can hear you just fine. And your slides are up on YouTube, so I think we're all good.
Okay, it's great to be here, Stan. Thanks for having me. I won't keep you too long, folks. Stan's gone through a great deal of what's happening in the US and what's happening in the UK already. So let's kick off. Again, the first thing I've got to do is to put up this UK focused disclaimer. And although I'm fully qualified to give financial advice, I can't do so because I haven't sat down with you and done a long and a detailed fact find. I'm allowed to talk about those shares that I hold myself, but I have to make it very clear that although those shares are suitable for me, may not be suitable for you. And the regulators asked me specifically to say that I'm holding some shares in commodity companies which may definitely not be suitable for everyone. So that said, we can move on. So we're going to talk about the American market first. I can't be too bearish of the American market because the S&P 500, which I trade actively for income, is close or at all-time highs. And I can't be too bullish, as Stan said a moment ago, because the market breadth is poor. And certainly until Jackson Hole is over, I think in the main, the cynic in me says that retail players are buying the breakouts and pro money is selling into the strength. I think that we'll get some direction from the Fed's big powwow in Jackson Hole towards the end of August. So I would expect summer markets to be maintained until that, if not get worse. So as you know, yesterday was quite a big day. An upside surprise in jobs, a downside surprise in unemployment. And as a result, bonds fell and rates rose to well up over 1.3% and have stayed there. And that caused the dollar to increase strongly and commodities got knocked hard. So that's what happened yesterday afternoon. Goldman Sachs have taken a stance on inflation, and they have indicated that their opinion is that inflation is much, much less transitory than the Fed has been communicating over the last little while. And you will have noticed, ladies and gentlemen, that yesterday afternoon, the S&P was up, but the NASDAQ, in fact, was down. And that is indicative of a feeling that this dovish policy will not be maintained. And if rates do go up, or even the Fed talks about putting them up, that puts pressure on IT stocks. And that's pretty much what happened yesterday. So Stan's put up the color guard already. As you can see, we've got a green light saying that price is up day over day and week over week. We had a black star on the green light day before yesterday. Short-term trend is up. Underlying trend is up because the MTI is above 1. But because the buy-sell ratio is less than 1, there's a confirmed down in place. The buy-sell ratio has come up over the last day or two. And I think if we look at the next chart, that's the VectorVest composite of the US. And certainly since March, it's been stuck in this range. And the going hasn't been all that easy in there for those of you that are swing traders. Some exceptions. There's the MTI above 1. There's the buy-sell ratio with its nose right down, well below 1 at 0.71. My stomach tells me that if the buy-sell ratio comes up above 1, that we would get a confirmed up straight away, as the market has been moving up now, I think, for 2 weeks in a row. So we're not that far off it. A very good day on Monday and or Tuesday, we could certainly have a confirmed up signal in the US that would wave bye-bye to this range. Whether that's going to happen before Jackson Hole is over, I really don't know. And certainly this has been quite difficult if you're a trend follower in this period. That's just a blow up of the same thing. That's the DEW. And the DEW, it's not on the front page of VectorVest. It's a very simple but robust method of determining the trend of the VectorVest composite at a 30-day weighted moving average weighted just means that it emphasizes the last few days much more than the first first few days of the 30-day sequence. So a 30-day weighted moving average and a momentum measure called the DPO, detrended price oscillator. And when this thing's above its center line and the price closes above the moving average, it prints a buy signal. And as you can see, given some reasonable signals, it got whipped here. But for the last few days, the DEW is up. And I use the DEW for my swing trading. It's been reasonably profitable in this period. So all the measures of the trend on VectorVest are up, apart from the longest term measure of the trend, which here in the UK we use for our worry-free methodology. And that's my old friend, the S&P 500. I use this. In the UK, we don't have a options market that trades with any form of liquidity. And I know that many people in the US use the options market for income. In the UK, we have a functioning spread betting market, which allows you to take bets in pretty much anything. And those bets are tax-free. And I use the S&P 500 these days for income trades. And I have a few very simple setups that I use to actually trade the market. Some are 2 to 3 day moves, some are intraday moves. But I was actually short of it on, I think it was Tuesday, and I was short of it, and the market came down to this low and turned on a sixpence, and it then motored up and traded an outside day. And then on Wednesday, it traded an inside day, and I bought the high of that and traded it over a couple of days. I would expect this looks very strong to me, folks, although it is summertime. I use 2 moving averages to define the trend. Well, actually 3. I've just got 2 on this chart, 21 and 55. And then I take signals from price action, very simple price action. And one of our members who's an absolute whiz on Unisearch, Mark, has in fact coded a great deal of those signals for us on Unisearch, and we had a superb presentation on those over the last couple of weeks. So that's the 4-hour chart of the same thing, and that's that reversal that happened last Tuesday. Then it came down there, and it turned on what you used to say in South Africa, on a ticky, and moved up very strongly indeed. That's an outside day. It's also a hammer candle pattern, and I think that with a fair wind behind us, we can get up to 4493. The only doubt in my mind, of course, is this whole summer business, a directionless time between now and the Fed towards the end of the month. So I certainly will be looking for a long. I haven't got a position now. I closed it. I didn't hold these positions over the weekend. In fact, I rarely hold them overnight, but on Thursday night, I held it overnight, and I should be looking for a long. And my preference will be look for a long on Monday afternoon, okay, when it opens. That's the NASDAQ, and as you can see, S&P up strongly, 25 points, 30 points yesterday, and the NASDAQ came off yesterday. Not the end of the world. It's a very strong technical target here, but certainly the good jobs report, maybe QE coming to an end, some form of taper. The implication was that was going to hit tech stocks. You can see tech stocks down on the day because of that. I've been very, very careful in this period, and I've only got 3 positions on the American market. These are leverage positions. I don't need to trade that often to actually satisfy my goals. My objective is to build an edge, and then I want to work out from that how long it's going to take to double my money from the rule of 72, I can make 5% a month, well, it's going to take 72 divided by 5 months to double my money. And then all I've got to do is to scale that. And the stock market is one of the only places where you can actually scale without having employees or selling hours or anything like that. And that's why I love it, and I've always loved it. Sitting on my own, I can scale. I don't have to open up shops. I don't have to employ people. So that's the beauty of the thing. I have a position in Crocs now. Recently, I've been looking at just the Midas Touch watch list. People keep asking me, where did you get these from? Well, it's just from the Midas Touch watch list, which is an automatically generated watch list on VectorVest. And then I look for good fundamentals. Strong RV, reasonable RS, certainly above 1, and hopefully we're trading below the VectorVest valuation as well. And I'm very pleased with this one. This is where it came from, Anat. There's my 3 moving averages, 21, 55, and 89. And when the 21 crosses above the 55, crosses above the 89, that's known in my book as a bow tie. And one of our members, in fact, here in the UK, Stephen, very knowledgeable investor, has been running a portfolio just with momentum trades using the bow tie, and it's produced exceptionally good performance. I assure you, folks, that if you're managing money for other people, which I did for a very long time, you learn about momentum very quickly, because you're managing money for other people and the shares don't go up. You lose clients very quickly. So the objective is to put together the fundamental position with the technical position, and the Midas Touch does that for us beautifully. This is Anat. Now, I didn't get this one. I'm long from here, from that little horizontal line. I'm long. We slugged in here at the old high. It always does that before it broke through. But this is an example of my spring setup, which is, I know people say I'm a one-trick pony, but that's my spring setup, and it worked beautifully there. This breakout was a particularly good one because you can see that low didn't quite get back to that old high. And folks, if the trend is up and the market doesn't get back to the last old high, that's what Charles Dow called a strong trend. And invariably, a breakout produces a really good result. I think, Stan, your shorter term moving averages would have caught that before the breakout, but nevertheless, it broke out very strongly indeed. And I have got clients that do nothing else but that. They wait for a strong trend, they buy the breakouts. The only time a breakout works is in a strong trend. You can also look for volume as well. This is a really, really good example of a spring, a Richard Wyckoff spring. And if you ever are dumb enough to try the Forex market for a living, you'll find that the spring is pretty much the only setup that makes any money. And there's a chap in Dallas selling my spring setup for $3,000 for a weekend course. So, and of course, the real reason, folks, that it works and worked so well is when we put together the technicals and the fundamentals. And so we've got a share that's rising. Earnings per share is flying up the park. VectorVest revalued the thing based on this step input in forecast earnings per share. And we see this wonderful gap. We have a young man out at our Oxford group, Steve, who's got a name for this, where the value is in fact pulling away from the share price. And he looks upon that exceptionally positively. And Steve, you're quite correct in that. So we had a situation in this share, ladies and gentlemen, where the technical position was pristine, and for most of its time, it's been above the 21 exponentially smooth moving average. Go back into it here. Earnings per share is rising. The share is undervalued. And for a lot of this, the general market has been fine. And when you put both together, you get very lucky. So I've got an edge And certainly in US shares, I've got the ability to scale that and scale it quite easily just by buying more and more shares as more and more money comes into the account. And that's how you actually achieve exponential growth. And I'm very proud of that trade. I have a couple other running, but they're all based on the Midas Touch watch list. And the gentleman I spoke about, Steve, in our Oxford group, we've got Steve RT40 and Steve Tesla in our Oxford group. So Steve also, Stan, has made his life's work, that RT40. And we've had many presentations on that as a momentum indicator, as a leading indicator of change. So steady as she goes in the US. I think we could have summer markets running for the next couple of weeks. I'm still very positive of a push up towards October or November. And I wouldn't be at all surprised to see the S&P go significantly higher. Clearly, the danger is this damn Delta variant. And I see in the paper this morning, the new cases in the US are right at the top of the list worldwide. We here in the UK, we hopefully are on the lee end of the so-called third peak. In the UK, well, we've had, as Stan says, a great deal of green on the color guard. The foot came off the gas a little bit on Friday. And clearly that's, I said earlier that the commodities got a knock on the UK market, very commodity orientated. But everything is up. The short-term trend is up, primary wave, underlying trend is up. We've got a confirmed up. The MTI is at 1.33, I think, if I can read that little print, and the buy-sell ratio at 1.67. And what's happened during the week? The BOE, Bank of England. The Bank of England unanimously, I hope I've spelled unanimously correctly, and my spelling's gone to hell in the handbasket, at 0.1%. And one member only voted to reduce money printing, but he was overruled. GDP is forecast to rise at a whopping 7.25% for 2021 and raised to 6% for 2022. That's inflation. That should, oh, David, you cut. That should read inflation. I'll change that before the notes go out, Stan. Inflation has been raised to 4% for the fourth quarter of 2021, 2.5% 2022, and back down to the BOE's target of 2% in 2023. So the BOE, in fact, acknowledging inflation in the short term, and the rhetoric much stronger than what's coming out of the Fed, in my humble opinion. The conclusion from the Bank of England on Thursday was that the bank's in no rush to tighten, as they believe that inflation will fall away as bottlenecks disappear. And I quote Bailey himself on that. So that's the VectorVest composite. And there's COVID. That little horizontal line marks a very special day. That's when yours truly went into cash completely, got stopped out of every bloody thing on that print. That was an interesting little morning. And got back in, very proud of this because I got back in, and although the confirmed up is there, I was pretty much fully invested by the confirmed up, because after a big sell-off, I found that the DEW provides a really good place to get in. And that DEW signal occurred the guts of a month before the confirmed call signal. So I got in very early there, and many people laughed at me. But nevertheless, good old Boris, my bet would seem to have paid off. Our Prime Minister has made 2 bets now, and he's won on both of them, I think. I hope so. The jury's still out on the second one, but it would seem to be playing off. We had a confirmed down in November, which came to nothing. And folks, I think Stan mentioned the same thing. That confirmed up in Canada in November. This was the Pfizer announcement, okay? We had a bit of a speed wobble here. And that confirmed down lasted a few days, and we're back off to the races again, I hope. That's the shorter term version of the same thing over 6 months. That's the confirmed down, that's the confirmed up. And those of you that know my work, you should be able to see the reverse divergence that we have on the MTI, which is always a fairly good predictor of a move. Again, I have done this with some people, I haven't done it with everybody. This is, again, in fact, coordinating. Again, said that price and time are the same thing. And he used a very simple bit of trigonometry, stroke Pythagoras, to work out turning points. And he shrouded it in a great deal of mystery. But there's nothing much more to it than those two lines. This is moving up, and clearly it's going to take a day or two to get through those highs, but it bodes well for me. It really does bode well. Now, the UK market, folks, is cheap. The American market is on an average price to earnings ratio of 26. Our market's on 15, and there's not a day goes by that there's not a bid. A great deal of money sloshing through the private equity business in the US looking for things that are cheap. And I see this morning, yesterday in the paper, that Morrison's, a big supermarket group, another company has come in to make a counter offer. So there's a scrum going on for Morrison's. Meggitt, defense contract, was sold during the week at a huge premium to the share price. And Ventura, which is was supposedly bought out by Marlborough. And I see another company's put a bid, Carlisle's put a bid in for it this morning. So our market here is cheap, and I think it's the focus of a great deal of attention at the moment. So I'm after many years of poor performance, I'm hoping that we're going to see a great deal of energy in the UK market. That's the DEW. The DEW is up, and I'm fully invested, probably invested in too much. Probably need to trim them out. And the only two stocks that are giving me any decent headaches is Polymetal and Pan African Resources, which are gold stocks. I'm happy to hold on to them because the rest of the portfolio has done so well. I've got a great deal of slack there. In the last few days, UK people, I bought a few Crichtons. I could only get a few. Okay, so hardly worth talking about in relation to the rest of the portfolio. And I bought a reasonable holding in Cape. I've been watching for that for quite a long time, but we'll discuss all of that in detail on Monday afternoon, okay? And we'll look at them all on Monday afternoon. I'm very happy with the performance. That's Cape Tech. And Cape Tech, it's also on the Midas Touch watch list, but I've watched it down here for a long time, and then it came off these lows. As you can see, as it came off the lows, volume went up. And then it pulled back for 2 days, and you see the volume dried up, and I just couldn't resist that. I bought in just there, and I'm hoping that I've got a big one on my hands. But if we look at the bigger picture, folks, we see exactly the same things I saw on ANA. We've got earnings per share rising strongly, up from 10 pence to 17 pence. That's a 70% growth in the last year. The share is significantly undervalued, and there's a little bit of bumping in the moving averages just here, but the 21's above the 55 is above the 89. It's on a VectorVest buy, and that's just a really great edge. I'm not saying that it's going to be a successful trade, but I'm saying that the probabilities are well at my back. I've got an undervalued share that's growing earnings strongly. The price and volume relationships look very good to me. It's been going sideways for quite a long time, and the general market is rising. So when you tick all the boxes, you get very lucky indeed. And the beauty of the stock market is that once you've got an edge like that, and you make some money, you put it back into the kitty, and you now scale. It's the only business that you can scale as a one-man show. Unless you're J.K.R. Rowling or somebody like that, or a movie star. Gold's not so pretty, and that's the gold market, folks. It came off very strongly. I haven't put up a chart of the dollar, but the dollar gained very strongly yesterday afternoon. Gold price fell out of bed. I use the 8-week stochastic and the 8-day stochastic to give me an idea of when I should be getting into a low-risk, high-reward trade. And as you can see, that was a really good place to be looking for a long decision. And I'm not buying because this is down here, but if it is down there, it adds greatly to the discipline of getting in at the right place. And at the moment, the 8-day stochastic has still got a bit of work to do. It's still got a bit of work to do to get down. So I think we're going to see, I don't think there's a great deal more on the downside here, but we could easily see another couple of weeks before this, in fact, gets interesting down here. If you're not in gold stocks, then do nothing. But it is my view that if gold closes above 1860, 1870, that we're going to fly here. So if you're not in gold stocks, do nothing. If you are in gold stocks, both the ones I've got, Pan-African Resources and Polymetal, look quite steady at these prices, although there may be a bit of a smack on Monday. But both of them are paying 6% dividend yields, and they're making heaps of money at these levels. And that's, as far as I'm concerned, the prize. That's a monthly chart, again with my 8-month stochastic on there. And that has rarely let me down in 40 years. Okay? And that's why I think that this low we saw just here, that's the eventual low in this gold price. And as you can see, this textbook cup and handle. But maybe I'm talking my book. And certainly, if you want a quiet life, you won't go nowhere near gold stocks. Or London leader Susan Thornborough doesn't look at anything remotely commodity orientated. And I keep telling everybody, she looks 35 and I look about 85, and that's the reason why she stays away from commodity stocks. So I've been warned. That's Polymetal, and it's been in this sideways pattern. I don't think there's much more on the downside, but I'm going to sweat it out. And the reason I can sweat it out quite easily is that the rest of the portfolio is just doing so well. Platinum also got a knock. 8-week stochastic right down in the right place here. So we're getting close to a low risk, high reward trade. I'm not saying buy it for a second. We still need to get a signal from the price itself. This is one stock. I got stopped out of this stock at somewhere here, just at that red, a little day after that red at 105. SLP, I know the stock so well. Fundamentals haven't really changed. Their costs have gone up. There's been unrest in South Africa. But I haven't done anything. I think that platinum and gold and silver will take at best 2 or 3 weeks to bottom out after Friday. And I would like to see a close in SLP, ladies and gentlemen, above that level. And I think that those of you that are still holding it, and I know many people are still holding it, that you should see these lows as a line in the sand, okay? So that's SLP. Copper had a very good week before last, has given it all back up again. And clearly this is a very, very important trend line. I have a big position in BlackRock World Mining. I've added to position twice. I bought it there. And I added, remember whether it was there or there, I think it was there. And then I added a few more the other day. Uh, that was a very interesting question that that young man asked, Stan. And it's a question, it's something that I've got in my own portfolio. I have a stock called Games Workshop, which I bought into. And since my very first purchase, I'm up 20x in it. And I kept the stock because when I first bought into VectorVest, was the only place, only people that had heard of the stock. And I stood up at a London conference and I was asked by the chap who was running the panel, what's your best stock for the year? And I said, Games Workshop. Now, Games Workshop, Stan, makes toy soldiers, sir. And they make very good toy soldiers, and they make a lot of toy soldiers. And I was laughed at by the whole group because I was buying into a company that made toy soldiers. So I've held on to it. I don't particularly, in my philosophy, is that if you want to rebalance, folks, by all means, rebalance. But I don't like the idea of rebalancing and then having a tight stop loss in the rest, because it is my feeling that the stop loss needs to be where the stop loss needs to be, well out of the traffic. Otherwise, you're going to get stopped out completely unnecessarily. So I think that by all means, rebalance. But on the portion that you, in fact, keep, the stop loss needs to be where the stop loss needs to be, and that needs to be well out of the traffic. A stop loss any closer than the, that's obvious, that's closer to the price action or within the price range is just going to get stopped out, and you might as well sell the whole lot. But that's, I could be wrong. Okay, I'm wrong 30% of the time, so I could be wrong in that. Anyway, guys, I wish you all good trading. Those of you that want to listen to any more of this, I do a talk on Monday afternoon, 1:30 till 2:30 UK time. And if you would like to come along to that and you haven't got an invite, then just email me, david.paul@vectorvest.com, and I'll send you the invitation, all right? Sam, I'm all out of hot air, sir.
Hey, David, thank you so much. That was awesome. So much great content there. Much appreciated. I don't know what the fellow in or the individual in Dallas is teaching, but I think we get about $3,000 worth of value every time you come to our forum or do one of your webinars. And VectorVest is certainly glad to have you. And I would love to see those likes jump up a little bit. If you like this kind of content and this presentation, folks, you got to click the like button. That helps us grow a little bit. So that would be much appreciated. But great information, David. Thank you so much for that. I'm going to grab back the screen.
Okay. Cheers, everyone. Take care of yourselves.
Okay. Show my screen. Okay, I think we did that. Let's make sure here. Okay. There we go. All right. I think my screen is showing. Yeah, so for Dr. Paul, you can email him or you can go open up UK and look at the upcoming webinars and click on the registration button for his Monday afternoon presentation. And that's an easier way to get in there. Okay. All right. Yeah, thank you. Now those likes have gone up. Thank you. That's what I wanted to see. That was pretty fantastic presentation. So very much appreciated. And I learned a new turn of phrase. Maybe this is a David Paulism. I don't know, but he said the stock turned on a sixpence. In Canada, we would say it turned on a dime. So that was pretty good too. Okay, and thank you, Betsy, for including me in that. We're very fortunate to have David as well. So thank you, everyone. Listen, I want to take you through, and you know, there was just some great examples of what I want to show in David's presentation, some of the stocks that he is into. I'm going to show you how to find them really in kind of an easy, systematic way that shouldn't interfere with your regular strategy. But it's 4 simple steps to find the best stocks. And if that sounds good to you, just keep hanging around because there's a lot of great stuff to share. And you can kind of see the format over here at the right in this little schematic here at the right. Of course, it all starts with the market trend, getting that trend, and then identifying the strong sectors. Even if you start the other way and find a good quality stock that has a good setup, you always want to check the sector or industry group to make sure it's one of the leaders in that group and that the group is doing well. And so finding those quality rising stocks is an order of the day, and then just getting that order in without hesitating. We talk about vaccine hesitancy. Well, sometimes there's investing hesitancy as well, where investors and traders are just, kind of spooked a little bit sometimes by the news and by analysts who predict doom every week. And really, you just got to follow VectorVest and get in there and invest. All right, so let's move on. So step 1, we get the market trend. So before you buy or sell, ask yourself these questions. What direction is the market moving? Is it going up, down, or sideways? And you can look at our market timing graph. You can listen to the enhanced color guard report each night on the US side. And you can read the strategy section and, of course, look at the color guard. But with that market timing graph, you can determine which phase of the market we're in. When the MTI is near or below 0.60 and starts to rise again, we're in a blast-off phase. And when we're near or above 0.80 to 1.3 in Canada or 1.5 in the US, we're in the trending phase, and there's more money going into dividend types of stocks, growth stocks and value stocks at that point, as opposed to sort of the bottom fishing type of stock. And then when we're near or above 1.3 in Canada or 1.5 in the US, the market is said to be getting a little toppy and possibly extended. And we just need to be a little bit more careful. We still want to buy when the color guard is bullish and we get a buy signal, but you need to be a bit more careful. So knowing how long the trend has been in place is important. The longer a trend goes, we showed on the Canadian confirmed up call, we've had 5 touches on our lower trend line or the 65-day moving average. And so that's getting a little bit extended, and just we need to use a little bit more caution. There could be some profit taking going on. And is my stock moving with the trend or against it? So those are just all great questions that I think you should make a note of. And of course, our founder, Dr. Bartolito, says the single most important thing to know is whether the market is going up or down. Everything follows from that. And the VectorVest market timing graph, I've shown it already, and David has shown it as well. But here's a 3-month view of the VectorVest composite CA. You can get that from the full stock analysis report. Just type in the symbol VVC/CA, and there's what it's done over the last 3 months. And so, when it's going up like this, we got to be a part of it. Now, there was a pullback here. We didn't get it out of the confirmed up call, but we did lose a bit of momentum and then right back at it. And it was a very similar situation in the US with the VVC. So getting that market trend and following the market trend is really important. So here's the confirmed down signals. They sound a general alarm for protecting profits and using your stops. Not every confirmed down is going to be as traumatic and as protracted and extended as this one was back in March, February, March, due to the COVID. But VectorVest will always err on the side of protecting you and conserving your profits so that you can always invest another day. So on the US side, we do get a few more confirmed up and down signals than we do in Canada, but follow the timing signal that best suits your investment style. And you can use a faster signal, such as the primary wave or the green light buyer, to enter the market again after a confirmed down call. And then you can use the DEW and confirm calls for getting more defensive. You can use a fast signal to get in and a slower signal to use caution, if that makes sense. And I'm keeping an eye on the chat as well if you have questions along the way. So in Canada, you can see a very different situation. There's our 65-day moving average below the price. And when price has fallen below the 65-day, we still have maintained, we did get a confirmed up call here and here, but very few signals over the last 2 years. And that's a good thing, especially if you're a longer term investor. And the daily color guard report is a precise system of timing the market, and it's so important it's located at the top of the home page. So just to revisit it again for maybe some of you that are new, do not buy when the needle is in the red and there are red lights at the top of the color guard up here in price, for example. And if the needle's in the green, we should be aggressively seeking buying opportunities, and buy with confidence when the needle's green, and especially when you see lots of green lights in the price column. And when the MTI and the buy-sell ratio are rising, traders and investors can invest with confidence. And that's kind of what's happening right now. We've come off a very low level with our buy-sell ratio down around 0.20, which is really bottom fishing territory. And we've been moving up with the buy-sell ratio ever since, and the MTI. So if you're an aggressive trader, you can buy when the primary wave is up. Others might wait for a green light in the price column if you're a little bit more conservative, or even the DEW up signal. But most of all, you got to have a system that recognizes when you're going to get in and then what stocks to buy, and that's what we're going to talk about next. Heed the color guard. You can read the timing section. I think the enhanced market timing video every day in the US is a must. And then every Friday in all of our countries, we get a video on market timing followed by the presentation video. So really do pay attention to that. All right, so step 2 is to identify the strongest sectors. And why study sectors and industry groups? Well, fund managers and analysts are constantly looking at sectors and industry groups that are going to benefit from economic conditions and trends, interest rates, inflation, corporate earnings. Of course, VectorVest gives us that analysis every Friday in the market climate section. But they look at the weakness or strength of the US and Canadian dollar, product supply and demand, infrastructure spending, if it happens, and rising retail suggests the economy is recovering. So all of these factors impact sectors and industry groups. So it's important that we stick with good, solid, robust sectors and industry groups as well. And VectorVest uses 3 primary indicators to identify the hottest industries and sectors: average price trend of the stocks in the group, the relative timing trend, our momentum indicator and trend indicator, and then RT ranking, so we can actually rank the performance of a sector and an industry relative to other stocks other industries and sectors. And here's the RT ranking on a graph. And when it starts to rise, we know that the sector is starting to outperform other sectors. And there's the relative timing crossing above 1, and there's price crossing above the 40-day moving average. And that's what I'm really looking for. When all those 3 things are in place, we are in a good position. So let's just have a look here before we go to the next step, which I know you'll find interesting, and that is the stock selection and a methodology for you to use. I'm going to give you that here in a minute. let's just go to the US market here first. And I'm clicked on the viewers tab, and I'll just go to the stock viewer, the sector viewer, I should say. It's the more broad based industry grouping. The industries are part of an overall sector. But let's just have a look. Let's, for example, look at instruments. It's currently ranked number 1. And so this is a great place to start. When you select a stock, or you come to the sector and look at the stocks, you can identify some good trading opportunities. But let's look at the instruments, for example, and we'll just click on View the Sector Graph. And so here's our setup. And by the way, the RT ranking, if it's not on your sector or industry graph, just come to Add Parameter under Capital Appreciation, and it'll be right down at the bottom of the list. And then when you add it, you just click on it to add it to your graph. And of course, I've changed the style to make it a little bit thicker here. But when it starts rising and the RT itself gets above 1, and here we have the price of the average price of all the stocks in this sector getting above 1. And this happened right around May 20th. Okay. So May 21st, May 20th, right around there. So what I like to do to kind of make the case here a little bit is take you from May 21st to current and just see if there were any stocks that might have had some opportunity to make money. And that's what it's all about, is making money. So I'm just highlighting instruments, and then I'll right click again and I'll view stocks in the business sector. Of course, it pulls up on my other screen. And now I can do some analysis of these top stocks. Here's some buy rated stocks. And again, I said we were looking kind of at around May 20th, May 21st, when that industry group really took off. And so we would be watching the stocks in this industry group as of May 21st. I've changed the date. And let's just see what would happen if we click the top 10, for example. And we've got some winners right up at the top. Let's see, 616 I'm going to. I want to go all the way to current. Just change the date here so that we can go all the way to current. And we're up 19% as a basket of these 10 stocks, and we don't have any losers. And some big winners at the start here. So I don't want to beat a dead horse here, but if you do this exercise with the other top sectors or industry groups, you're going to get very similar results. We've been in a very nice uptrend, and it doesn't matter which country that you're looking at as well. It'll work equally well. So here's steel, and I think everyone in Canada is well aware of Stelco and or the one other steel stock that's in the sector. And wouldn't it have been nice back here at the left edge 1 year ago to know that steel was really starting to ramp up and you could get into that stock. Okay. So identify the strongest trends. There's 3 ways. Again, sector and industry viewer. I've just shown you that in the viewers tab. You can actually have those right on your home page for sectors and industry RT sort. And you can go to the viewers tab for that default RT sort. Unisearch, we've got delta searches for industries and sectors and high-low searches. Those are the folders. And for graphs, I've shown you that. Favor sectors and industry groups where price is greater than the 40-day moving average of price, and RT is above 1 and rising, and the RT ranking is rising, and you're going to get some great opportunities. Stefan, I should say, says, is it too late to get into steel? Not according to our ranking of the sectors and industries. And, I think for the last 6 months, people have been worried that it's too late to get into steel, but you just got to follow the information that's in front of you. I think that's the best answer I can give. When it's still rising, you want to be in there. Yeah, and Ron, you can do a Unisearch or search for sectors going from RT less than 1 to greater than 1. Absolutely. And our support team would be glad to help you with that if you need some help. Step 3 is find quality stocks. And this is where I'm going to spend the next 10, 15 minutes or so, finding quality stocks rising in price. And some of those will be in those top sectors and industry groups. Some will be in the stock viewer. You can go right from there. Some will be in your favorite watch lists. But what you're looking for is buying stocks with the best combination of value, safety, and upward price trend. And that is the RT indicator. Okay. Yeah, Neil says Stelco is now my biggest holding, and I'm not trimming it yet. He says greedy. And I loved Dr. Paul's answer to what he would do with the question posed by Hubert. He's a big believer in letting your profits run. Getting back to even, taking risk off, and then letting your big winners just keep going. But here's relative value, an indicator of long-term price appreciation potential on a scale of 0 to 2. Wouldn't we love to see the relative value above 1? Relative safety, risk analysis on a scale of 0 to 2, looking for those consistent, predictable earnings. I'll give you a concrete example. I don't usually like to hold stocks through earnings unless they have a high relative safety, unless earnings per share is rising all the way to the right edge. This week I held PBH, Premium Brands in Canada, and I held Go Easy. Both of them had stellar earnings, and both of them kept going. So RS is one of my favorite indicators. Relative timing, I love the relative timing indicator. It's very fast, very dynamic on stock trend, day over day, week over week, quarter over quarter, in 1 year. I also am going to show you the benefit of putting the 40-day moving average of RT on your graph. I'm going to show you that in a minute. Yeah, VST is weighted, and RT actually has the largest weighting. A couple of people asked this question, and then relative safety, and then relative value. So RT, Dr. DeLito, our founder, he believed price action is really what's important, especially for traders. And so if the RT is rising, the stock fundamentals may not have caught up yet, but RT will make you some money. Okay, great question. So VectorVest provides these values for you in Stock Viewer, and just right click on the stock and choose Full Stock Analysis Report to get more detail. Never buy a stock without looking it up. And we'll go to Stock Viewer in a minute, but just for this lesson, I'm going to be focusing on buy rated stocks that have gotten a new buy rating. I'll show you a methodology for not sort of getting caught in a false signal. It's like any indicator. And look, I've looked at a lot of different indicators with different services. The buy rating compares favorably with anything I've seen. Many cases it's faster to give you that good buy signal when a stock is rising in price. And I'm going to show you that and how to play it to avoid some false signals. Market timing is important to avoid a false signal, but so is what I'm going to show you. All right, but here is, I want to keep things simple. And again, you can use this methodology with your favorite setups, with your favorite searches, industries and sectors. We're looking for strong continuation patterns, because when you have a new buy or an ongoing buy rating, it's in a continuation pattern. You don't even have to know about technical analysis. Just follow the buy ratings. Okay. So here is Go Easy. I happened to mention it. I had earnings on Thursday evening and had a nice 5% gain on Friday. Here's the VectorVest summary. Go Easy is undervalued compared to its price, has well above average safety, and is currently a buy. So this is the summary, because VectorVest wants you to buy undervalued stocks that are safe and rising in price, so everything aligns. And the recommendation buy reflects the cumulative effect of all the VectorVest parameters working together. These parameters are designed to help investors buy safe, undervalued stocks rising in price. All right, to get a new buy rating, 4 conditions must be met. Price must be greater than its stop price. The VectorVest, basically the sell rating, where we say it's, you got to take some action to protect yourself. So it's got to be greater than that stop price. The relative timing, our trend and momentum indicator, must be greater than 1. The value safety timing, a great place to start with any stock analysis, must also be greater than 1, the combination of fundamentals and technicals. And then price must be pulling away from that stop price. And in other words, the gap between price and the stop must be increasing. You can only see that on a graph. And it's an algorithm, so it's pretty precise. And it's sometimes hard to see, but often it isn't. You can see it quite clearly. So here's what I want to say before we look at Stock Viewer on the US and then Canada. And again, it's the same for other countries. But by focusing on buy-rated stocks, we are looking for breakouts and strong continuation patterns. Here are a few reasons why the new buys and buy-rated stocks are so effective as a technical indicator. You can incorporate them into any one of your favorite searches, your setups, or your trading systems. They occur frequently in VectorVest. So, we have a low buy-sell ratio right now, but we still have a lot of stocks that are getting those buy ratings, both Canada and the US. And we know that those stocks have a good combination of value, safety, and timing. They're rising in price. You can't get a buy rating unless the stock is moving up. And you can find the new buys and buy rated stocks easily in searches, viewers, and graphs. All right. Let's have a look just to see what we're showing here. And then I'll give you some rules to work by to help you avoid some false signals. I'll go right back to the US side of things here, and I'll go to the stock viewer. And Moderna right up at the top here. But let's just graph these stocks and I'll show you what I'm looking for. So here is a new buy. This was a new buy rated stock. RT is above 1, good volume. VST obviously will be above 1. If I put on the stop price, it's a light blue line. Let me just make that style a little bit thicker. And I may even just change the color a little bit here so you can see it a bit better. And for the moment, I'll take off the 40-day. So here we see price pulling away from the stop price, pulled back a little bit here, and then we got a new buy. Pulled back here, we got a hold for a couple of days, and then we got a new buy. So we've gone from $160 to $413. You just need 2 or 3 of these in your portfolio to make a heck of a difference, right? All right, so I'll show you the methodology in a minute. We don't take just every new buy. For example, back here, we had a new buy. Now, was this a DEW signal? Yes, it was. But I'm going to show you how we would have avoided that signal in that one. But just to show you a couple more, here's another one. We got a new buy here. And again, we didn't get follow through the next day, so we would have avoided entering that position. But we got another new buy here, and we did get follow through. So we might have gotten in there, and we've gone from 38 to 49, although it was a little bit choppy. I'll show you how you set your stop price to protect yourself and still let these great stocks run. Here's click, new buy here, and a pretty good run from there. And look at the new buy back here after the hold. Folks, I harp on this a little bit in our Canadian Q&As, but let me know if you're someone that always looks to the new buys. Give me a 1 in the chat. If the new buys is something kind of a new idea for you, this presentation is new, maybe give me a 2 in the chat box. A 1 if you're using the new buys or the buy rated stocks system, or give me a 2 if you really haven't been paying attention to the buy ratings. I see 1 from Stefan Coin is 2. Geezer Tom says 2. I see a lot of 2s and few 1s. So a lot of folks are tuned in, but I do see a lot of 2s. So hopefully this is going to help you, if you're a 2, to use this a little bit more and to use it more effectively going forward. So thank you for sharing the information on that. I just want to have a quick look here. So this is one of the examples that David showed in his presentation. And just looking at it from the new buy perspective, you'll notice it got a new buy on April 21. And you always want to look to the left and see what RT's been doing, see what price has been doing. And I like to put the 40-day moving average on there. And I can see that it's respecting the 40-day moving average quite nicely. Okay, so it to me is already becoming a trade idea or opportunity, but actually it didn't actually get a new high until a few days later on this new buy. And so on May 3rd, for me, even if I didn't know anything about technical analysis, I could say, well, this stock is rising in price. There's the 40-day or the stop price here and the 40-day moving average in green here. Let me just fix that up a little bit. Go back to our usual color and make it a little bit thicker here. Just take me a second. So there's the 40-day moving average, and it's hugging that line. So I'm already tuned in. If I ran the new buy search, if I'm looking at the graph, I'm tuned in that this is a good trade opportunity. I would look at the fundamentals a little bit more, maybe look at the news, check with earnings, make sure that earnings aren't coming up tomorrow, and it doesn't look like they are. But you go from 116 to 172 in price. You don't need too many of those to kind of make your year, do you? Yeah, Wayne Dick says new buys are a killer combo when they're in rising sectors. It's a killer combo. Thank you, Wayne. It really is, and I guess that's why I want to hammer it home, and I want to give you some rules here in a minute to avoid some kind of maybe false signals that might happen from time to time. Everybody liking this so far? I'd love to see that like button just shoot up in numbers if you're liking this so far. Okay. All right. All right. So let's close out of here, and we'll go back to the slides for a little bit, and then I'll come back to more stock ideas here. Thank you, Terry. Appreciate the comments. All right. So here's the conditions that I look for. Obviously, we want that broad market to be in an uptrend. Whatever signal is your signal for market timing, you need to be sure that the market is rising. The color guard should be at least mildly bullish, if not totally bullish. Okay. So the color guard is bullish, or at least mildly or somewhat bullish. The trigger. This is really important. The trigger is that new buy signal for this methodology. It comes typically after the hold rating, either a one-day hold or a few days where it was a hold, or even a year where it was a hold. And then all of a sudden it gets a new buy. that is your trigger. That's not when you go out and put your money down and buy the stock. We look at the left of the graph for support, for channels, maybe a bullish candlestick for any bullish pattern. And if there's support there, that's a good thing. I like to use the 40-day moving average RT. We want it ideally beginning or displaying a strong new thrust to the upside. In other words, maybe it's come down and then flattened out and is starting to rise again. That is a great entry. And for those of you that are new to VectorVest and new to technical analysis, I might suggest you kind of wait for the 40 moving average of RT to have at least flattened out, but ideally rising from that flat valley or trough, okay? And then the confirmation comes after the trigger. We look for the next candlestick after that buy rating, the new buy, to make a higher high, or a higher high might occur within the next, 2, 3, 4, 5 trading days. If it goes longer than that, it's not a valid signal. Just get it out of your watch list and ignore it. Go on to the next one. There will be lots of opportunities with this methodology, okay? All right. So what does this look like on a graph? Hopefully not quite as bug-eyed as this guy, but what does it look like? Let's have a look. So here is Myrna again. And we had the trigger for a new buy right here. And that was on this day. And then we got a new high after the DEW up signal right here. We got a new high and we're ready to go into that position and get it going. Now that's actually a few more days than just the 5, but I think you get the idea that we wanted to wait until we've got that DEW up signal or whatever your trade timing signal is. If it was a primary wave, you might have gotten in back here, which would be fine. That's at $174. Notice the 40-day moving average of RT came down where we kind of lost momentum. That's common. And then as it gets down closer to the valley, we start to pick up momentum again. Notice it's starting up here. So this was actually a pretty good entry right here. Now here's another one. And my question to you, give me a 4 if you think this is a trigger for a valid new buy and that this was a valid entry. Actually, what I said here is type a 1 if you would have taken the trade right here, and a 2 if not. We are in a DEW up signal. 1 is if you would have taken the trade right here, and a 2 if not. Yeah, and Gord says, I've been using the 40 moving average of RT curling up lately with good success. I see lots of 2s, so lots of folks would be waiting, and more would be waiting than taking the trade back there. Okay, well, for me, it is a valid entry, and you would have put your stop somewhere here below this recent, the previous candle, or below the 40-day, or the stop price of VectorVest on that day. Now here's another one. Back here at the left, where I've got this left black arrow, we still have a green light. DEW is up, and we've got a new buy right here on this candle. Is this a valid entry? Does this candle confirm in the next several bars? Give me a 5 if you think it confirms, and a 6 if you think it doesn't confirm. Yeah, and Diana says, I took it way later at 216. And you know what? You see a little bit of a pullback. RT is 40 is still rising, Diana. No problem. Lots of people say 6. No, this is not a valid buy. So if you can avoid some of these because we did not hit a new high after the new buy, it stayed a buy rating for a while, but we didn't get a new high. So you don't get into that position. And the dead giveaway is we're at the top of the peak here with the 40-day moving average, and it's starting to fall. If it were a little further down toward the trough, I would feel better about it. Like here, I would have felt better about it. But back here, no. Easy rules, simple to follow. How many think this is kind of simple in terms of the rules that are easy to follow? Just type a Y if you think this is something that you could do, and you could do with any of your strategies. Like I say, you don't have to be an expert in technical analysis. Yeah, Tony says yes. Tom says he's still on the one before, 6. Geezer Tom says yes. I see lots of yeses, that this is something you could do. Yep, Jake says yes, simple is good. So here's another one. By the way, I forgot to mention, here's where you would put your stop. So you could use the 40-day moving average of price for the stop or the stop itself, but the 40-day moving average is around $160 right here where this green arrow is, and it's just below or just right at the 40-day moving average. It's below the 2 previous candles, and to me a 7.6% stop price on a fairly volatile stock because of its industry group, I think would be quite reasonable if everyone would agree with that. Okay. All right. So here's Go Easy, and it's certainly been rising. Now here was a new buy right on this candle, but the RT wasn't particularly favorable on that one. It still would have been turned out to be a really good entry, no question about it. And you did get a higher high here, so you could have taken that trade. The RT was certainly strong, well above 1, but for my money, a little bit better, especially for newer investors and new to technical analysis. If you waited for the valley here or the trough, and then you got a new buy after a hold, this is a great opportunity. Now, I've held Go Easy for a long time, and this was an opportunity to add shares right here, and I didn't do that. I'm pretty fully invested in it. But if you use the VectorVest stop at 146 right here on this entry, that's about 7.7%. You're below this spinning top right here, which is kind of a bullish candle. And you've got your new buy in this long candle. And then you've got a new high the very next day. So it's a valid entry. All right. Anybody liking this so far? Any questions? Is there a search for new buys in rising top industry groups? You can certainly set that up, Glenn. Just the trend is a new buy, and you can set it up with any of those industry searches. If you need some help with that, just give our VectorVest team a call, our support team. All right, so study the graphs of stocks in top sectors. That's another way to get some great ideas or opportunities, sectors and industries. Study graphs in the stock viewer and watch list. So you're going to find some great entries there, just as we did on the US side when we were looking. Run Unisearch. There's a new buy rated stock search. It's in the trends new stuff folder. So you can run the new buy rated stocks and then do your analysis and make sure that the stock is hitting a new high before you enter a position, and make sure you've got your stop criteria in place. And you can add new buy criteria to your favorite searches, just as Glenn was asking about. So you can make sure that it's a buy rated stock or that it just got a buy rating. And you can create a watch list of new buys for further study. What I like to do on weekends is run the new buys. If I've kind of haven't been able to do it during the week, I can run the new buys Monday, Tuesday, Wednesday, Thursday, Friday, create my watch list, and I'm ready to go for the next Monday. So put the best candidates in your new buy opportunities watch list, and then cherry pick the best candidates from the stock viewer and watch lists for that new buy opportunities list. Yeah, Angelo, he says, my doubt is, does top sectors be a very next downtrend sector? It certainly could be, but sectors just like stocks, once they're in a trend, the trend tends to continue until it ends. And you could worry about that. And if you worried about that over the last year, you missed out on some great opportunities in the steel sector, the REITs, the insurance, the banks. All of them have been going gangbusters for many, many months. So my guidance is follow VectorVest, set up the graph the way I showed you with a 40-day moving average, the relative timing, and the relative timing ranking. Okay, but great question. Lan, you could certainly set up your target for Go Easy, a price target. I just actually don't have time to go into that, but you could definitely use Fibonacci. You can use the gain from a previous setup to the next setup. Lots of ways to set it up, or just set a price target that you would be happy with. Is it 20%? Is it 30%? Is it 40%? Make it realistic, but make it a target that you're happy with. Yeah, Bob is right. Lumber was up big and then down big. You are so right. And VectorVest alerted us to that very quickly. And those stocks fell out of favor very quickly. All right. Here is the search. It's in the trends, new stuff folder. It's the new buy rated stocks. This happens to be US, but all of our countries, Canada, US, Australia, UK, and Europe, we all have this folder with the new buy rated stocks. The volume might be different. That would be about the only difference. And of course, the exchanges and the ETFs. RT doesn't necessarily have to be above 1 ERV. I'm really looking at that 40-day moving average of RT. Let's just quickly go to, well, I'll finish up here and then we'll go to Canada and just look at a few more. But step 4 is buy and set your stop. It all should happen at the same time. You place your buy order, maybe 1/8 of a point higher than the last close. But again, making sure that the conditions for the trade are being met, as we showed in the previous slide. But you've got to take action and place your order, and then set your stop, your initial stop at the same time. The stop price of VectorVest on the day you place the trade is often a very good stop as a starting point. Gives you that room to run, but it's not too loose. So that's a good place to start. Or the 40-day moving average level is a good place as well. But set your stop at the same time as you place your order. Buy when price hits a new high after that new buy trigger for this methodology. Set your stop using the following choices: the VectorVest stop at the time of purchase, the 40-day moving average price at the time of purchase. So you can see that in the graph. You'll see the 40-day moving average price when you look off to the graph panel. And then use the low of the previous day's candle as another option or choice. And you can use a reasonable percent that you're comfortable with. Okay. Once price moves in your direction, set a trailing stop using previous candlestick lows, a percentage, or a moving average. You might tighten up to a 20-day moving average, for example, after you've sort of recovered your risk, but you can use a trailing stop. The goal here is that this methodology is going to get you off to a good start. That 40-day moving average, it's like a rocket. It takes a little while to get turned around and start to the upside, but once it does, price tends to follow along pretty strongly. Yeah, Ron, I do plan to send out the slides. VectorVest offered to send them out on Monday or Tuesday, but if I have time this weekend, you'll find them in your inbox this weekend. If you've never received slides from me before, then you need to send me an email at stan.heller@vectorvest.ca and request slides. If you've got them in the past, you don't need to send me an email. That just clogs up my email box. You're on my list. Okay. But if you've never gotten an email from me, send one to stan.heller@vectorvest.ca and I'll get you the slides. Irv is asking, what's a reasonable percent for you as a stop loss? Again, I love using that VectorVest stop, and oftentimes it is in that 7 to 12% range. Sometimes it'll be a bit deeper than that, and for this type of trading, I don't like that. I'm trying to keep it within that sort of 7 to 10 range, but based on either the candlesticks or the VectorVest stop or the 40-day moving average. That's how I'm trading it. So these were the 4 simple steps. You get that market trend. You identify the strongest sectors. There's trading opportunities that you will find in those sectors and industry groups. Or you can identify the stock idea and then just go to the sector and make sure it's a good, strong sector as well. Find those quality rising stocks. If it's got a buy rating, it at least has some redeeming fundamental qualities, because the value, safety, timing must be greater than 1. And then don't hesitate. When the market's rising and you've got a good setup, place your order. If something's holding you back by not placing an order, it could be that you're trying to buy too many shares. You're taking on too much risk, and so you get tentative. Has that ever happened to you as a trader or investor, that you think this is the perfect setup, but you hesitate because you're worried about too much risk? Give me a why if that's been you in the past. Give me a why, or give me a Y or an R, risk. That been you? Looks like nobody. Bob says yes. Sanjay says, unfortunately, yes. Ron, Eugene, Ursula, I'm not singling you out because, listen, there's a lot of us in this category. We hesitate because we're just too worried. We're worried the market isn't going to keep going up. We're worried our stock isn't going to keep going up. There's lots of things we worry about. So just, if that's you, put on a smaller bet, put on a smaller position, and just go for it. You've got to be an optimist. That's Dr. Toledo's 7th secret. You got to be an optimist. Yeah, Bob says yes. Who doesn't? I should have asked it that way, Bob. Is there anybody that doesn't worry about the risk? Good point. And RC says, well, it's the wall of worry. We all come up against it. All right. Before I go for any last minute questions, and we're almost at our 2-hour mark, so we've gone a little bit longer than usual. Well, maybe it's becoming norm. I'm not sure. But just to show this works in Canada, I'm sure it works in the other countries. Let's just go to the viewers tab here in Canada. Uh-oh. All right, where did that go? Okay, there we go. All right, so I'm in the stock viewer in Canada. So right at the top is Converge, and let's just look at this, and I think you'll see why I'm trying to encourage our traders and investors, our subscribers, to look more at these buy rated stocks. Almost all of these top stocks are buy rated at the moment, but let's have a look. When did they get the buy? Could we have made money? And I'm not going to worry just for now about the trigger and the confirmation, but you can start to analyze these yourself. CTS is almost perfect right here, and this is actually where I bought it. I hate to tell you that, but this is actually one that I ate my own cooking right here, and I did sell based on a tighter stop up here, and I haven't gotten back in, but I did buy here, and we got a new buy We were right at the bottom of a trough where it was flattening out here and then starting to rise. Lovely. We go from sort of that $6 level to $11. Okay. Here's Go Easy. Great if you came back in here at 142, but what if you came in here? Hold, new buy, trigger, new high, RT 40-day moving average starting to rise. You're at $74, and there really wasn't a reason to exit this position the entire time to $180. So Steve is asking, I've been mentioning the new high. Is that price poking above the prior high or the prior close? And I'm looking for it to close above the prior high. So if there's a huge wick on a candle where it got the new buy, we got to get above that wick, not just the body. Great question, Steve. Thank you for that. Yeah, Barclay says great new buy on CTS. Yeah, it actually got the new buy again recently, and so did Go Easy. So if you own the position, these are kind of opportunities to add shares as long as it doesn't throw your portfolio balance too far out of whack. But riding a good stock is a pretty good methodology. And you'll notice here the 42-day moving average of RT has been strong all the way along, but there still was a trough here, and it's gone pretty well from there. And here's what I mean when I say you can either go with a stop price or the 40-day moving average or another moving average as your initial stop. So here I'm at on 12.29. If I look to the right, the stop is $3.20. The price is $3.72. So that's right in that range where you want to be, about 10% as a stop price. The 40-day moving average would be $3.13. They're pretty close there. Up here, they're not quite as close. The 40-day moving average, if you were looking to get in here, the 40-day moving average would be a tighter stop if I look to the right at $7.40 compared to the stop price at $7.07. That's not an entry necessarily, by the way. Just giving you the difference there. All right. So again, just so many opportunities. So many opportunities. So here's a fairly new, recent opportunity with Caldwell Partners. Just did get the buy rating back here. I don't think it's too late because RT40 is just really starting to thrust higher. And when it did that back here, the stock price just kept going. I mean, it went from this buy at $1.11 to $2.15. So it's a pretty much a double before it pulled back. And when did it start to pull back? When the 40 moving average of RT peaked up here, started to fall back. And look at the RT. The RT was already hitting lower highs. This is the RT by itself. So some good warnings there. A bearish engulfing candlestick. You can look for other technical studies to help you. But if you don't know anything about technical analysis, I think you can follow this new buy methodology that I've set out for you today. Any last question or comment? Any last question or comment? We've almost gone 2 hours, and I really appreciate your sticking with me. I hope you click the like button. I see a lot of you have, and subscribe to our channel. It helps us all, so we really appreciate that. Let's just finish up here just by telling you VectorVest has a special on right now. It's just 99 cents for a 30-day trial. That's US dollars. So you can take a 30-day trial, and if it's not working for you, just make sure you diarize it and cancel before the trial is over. And if you're thinking of referring someone to VectorVest, this is a great opportunity to refer someone. They're going to get in at a very good price. And lots of people seem to like this. So thank you, everyone. I appreciate those kind comments. Thank you, Bob. Appreciate that. And Denny, thank you, says this has been great. Yeah, for I think if you've been struggling at all, and hopefully not too many of you have, but if you've been struggling, I think this methodology can help you. Even with your current setups and graph analysis, it can help you. And again, if you need to contact me, you've never received slides or any contact with me, then you need to email me for the slides. It's at the bottom of the screen, stan.heller@vectorvest.ca. And I won't promise I'll get them out today. I've got a bit of a busy day, leisurely, but I'll try to get them out as quick as I can. Thank you, everyone. Looks like we're all done. I just got to close off a few things, but I'll sign off. And with thanks again to Dr. David Paul, always a wealth of information. And listen, your questions and comments are a big help to everyone as well. So I have to say, we really appreciate your participation in these forum presentations. So look forward to seeing you at the next one. Thanks again, everyone, and have a great rest of your day.